So next topic I'm going to talk about is how long-term wealth has been created in this country by over 800 ETFs that are offered. ETFs are exchange traded funds, very low cost. And I'm just not shocked that passive investing can do this, right? If you just do a dollar cost averaging over the last, I don't know, 10, 15, 20, 30 years, where would you be, right? It's amazing what ETFs has brought, besides active investing to long-term investors. Look, active investing is fine, but it's not for everyone. If you have a job, you're not going to be in front of your Robinhood account trading, right? It's really difficult to do all this stuff while you're getting a W-2. There are some people that can do it, but personally speaking, I'm an active investor because I have the time, I have the knowledge, I have the experience to beat these benchmarks. But the benchmarks return 10% year after year after year, good, bad, sideways. That's the average, okay? And here it is. There's no ifs, there's no buts about this. Total holdings of US ETFs assets are officially hit 10 trillion for the first time in history. Okay. Obviously, people are doing the right thing. Obviously, people are going into ETFs. There's over 800 of them out there, and one will suit you. But for me, I've been talking about this issue for 4 months since I started the channel. S&P 500, Russell 2000, the triple Qs, the NASDAQ 100, those are the best ones out there. But there are so many. There are high dividend ETFs. There are so many. There are there are bond ETFs. Okay. High yield bond ETFs, high dividend stock ETFs. Like Schwab has an amazing one that you can reinvest the dividends on and accelerate that capital gain that you're going to be dealing with. Over the last 5 years, the size of the US ETF market has more than doubled. Yeah, because people have come to the conclusion that, okay, I don't want to be a stock jockey. Yes, if you had bought NVIDIA at the right time, you would have made a lot, you would have come way ahead, right? But then instead of being stuck with one stock, you just diversify your risk, and then you just keep putting every month, keep putting $100, couple $100 into some exchange traded fund, and you will reap the benefits. In the first 3 quarters of 2024, net inflows to these funds was 691 billion, right? Obviously, we're getting a rally. And, the higher the market goes, the more people will get in. Now, will they pull the rug under them? I don't know. I am not sure. Probably, at some point. But my only concern in all of this, okay, is that everybody's in now. Is there more money to come in? Yes, there's about $7 trillion in money market funds. And I don't know, but people are trusting the system. People are trusting the markets, and the benefits are clear. I mean, if you put $100 a month, look, I keep saying this over and over and over. If somebody invests $100 a month in an ETF, such as the S&P 500, and over 40 years, if you're 25, 30, by the time you retire, that outside your income, outside your what you're going to make, outside your 401k, outside your IRA, all of that, that $100 a week invested in an ETF that returns about 10% will turn into $101.2 million. That's an extra. Okay. Why don't you? Why doesn't anybody want that? I do, right? And I do it with my kids. They have their own accounts. My daughter is 20. She's putting $100 a month. She's working at school as a student instructor, taking $100 of that, putting it in an ETF. She's only 20. Imagine what that $100 a week is going to turn into when she's 65. Hopefully, she'll get some retirement. I doubt it, but it's going to be $1.5 million. There's no ifs and buts about it. It's the power of compounding, people. Start thinking, okay? Even if you're 40, okay, do it for 25 years. Okay, it's going to be, $600,000, $700,000. What's the problem, right? Wouldn't you rather have that than not have it?